It's a big money cast of characters. They're all going after Twitter now. We're talking former Clinton staffers, European governments, and a nonprofit sponsored by none other than George Soros. They are all taking aim at the soon-to-be Elon Musk-controlled social media company Twitter. You're not going to believe what they're up to, who they are. We've got the details on all of it for you. Meanwhile, Elon, who, I'll just say this, I give the guy credit. He single-handedly has made Twitter kind of great again, at least interesting again. He's out there firing back, and he's got a plan on how to manage and deal with these guys that I want to discuss with all of you. Meanwhile, a victory out in Ohio to tell you about. J.D. Vance. He is being heralded now as a big deal because this is significant for Donald Trump and his supporters, as well as the America First policies that are being debated right now. Mr. Vance locking down the Republican nomination there in Ohio. He's now going to be running against Democrat Tim Ryan. I have some analysis for you on this one. It's going to be a fascinating race, and it tells you a whole lot about where our country is heading and what our country is thinking. Meanwhile, all this inflation, the Fed is finally kind of owning up to it here. Finally getting itself in a cleanup mode, or CYA mode, whatever you want to call it. But the good news is it's hopefully an anti-inflation mode. This is the biggest move that they have made in terms of rate hikes in 22 years. But the question now is, will it work? We're getting into all of it. It's great to have you here. Hello, everyone. Welcome to the Trish Regan Show. Portions of today's program are brought to you by Legacy Precious Metals. There's never been a better time to invest in precious metals, clearly, than right now. So make sure you go to legacypminvestments.com for more. Again, that's legacypminvestments.com for more. Let's talk about Twitter. There's a big money takedown going on. Attempt, anyway, that's underway. You've got a group of 26 activist organizations and NGOs that signed a letter to companies who advertise on Twitter, warning them to reconsider if Elon Musk makes changes. The group includes organizations and NGOs that are backed by George Soros. It also includes Clinton and Obama staffers, former Clinton and Obama staffers, and it includes European governments. They're all in on this. They are all in on this campaign anyway to get corporations to boycott Twitter because, well, Twitter is no longer going to be under their control, you see. Now, is it? Not after Elon Musk has made it very clear that he has a commitment to free speech. I love Elon's reaction to this news, and I'm going to get to that. But first, I want to tell you about the letter itself. These groups, they write, and I quote, Elon Musk's takeover of Twitter will further toxify our information ecosystem and be a direct threat to public safety, especially among those already most vulnerable and marginalized. They go on, warning that advertising on Twitter means that companies risk association with a platform amplifying hate, extremism, health, misinformation, and conspiracy theorists. Oh, and they're not done. They also say under Musk's management, Twitter risks becoming a cesspool of misinformation with your brand attached, polluting our information ecosystem in a time where trust in institutions and news media is already an all-time low. Your ad dollars can either fund Musk's vanity project. He does actually want to take it public again, guys, because he does actually want to make money, as do the private equity firms that are going to be teaming up with him. Anyway, they write Musk's vanity project or hold him to account. We call on you to demand Musk uphold these basic standards of community trust and safety and to pull your advertising spending from Twitter if they do not. And then they point out some specific things like politicians who have been banned that they want to stay banned. One would assume one of those politicians would probably mean Donald Trump, right? Because you see, terror groups are allowed to have their Twitter accounts, but not former presidents of the United States, not in their view anyway. So Elon demanded to know who funds these organizations, and he tweeted that out, saying that sunlight is the best disinfectant. And sure enough, now the truth is coming out. So let's go through some of these groups here. Lovely groups like Media Matters for America. I mean, you want to talk disinformation. This group constantly takes anything a conservative says and pulls it out of context, entirely out of context, to try and gin up, I guess, page views, to try and get people riled up. This is what they do. They began in May 2004. They were started by a guy who had a really nothing career as a, quote, conservative journalist. And so he became a liberal one. And he went on to be described in 2017 by Politico as the Democrats' attack dog. Bad news kind of folks. Bad people. Accountable Tech is another one of these groups. DC-based group. It's led by a former foreign policy spokesperson for Hillary Clinton's campaign. There's another one called Access Now. I actually wasn't familiar with this group, but it's, per the Daily Mail's reporting, one that began back in 2009 during the Iranian election cycle. They're funded by European governments. And interestingly, George Soros' Open Society Foundations is their second largest donor. So there's a whole bunch more out there. I actually do encourage you to check out Daily Mail's reporting on this, but you get the gist, right? You get the gist. They're trying to put pressure on these corporations to completely bury Twitter. But I'll tell you this, it's not going to work. It's not going to work, in part because they're dealing with a guy that frankly is just smarter than them, right? I mean, he didn't get to be the world's richest man by, thinking like these politicians do. No, he thinks outside the box. He's trying to colonize Mars. He's invented the entire EV industry for them that they so love, theoretically. I mean, I guess they loved their Teslas up until a couple of weeks ago. Anyway, Elon is fighting back. He tweeted that, quote, Twitter will always be free for casual users, but maybe a slight cost for commercial government users. Well, that'd be interesting, right? Maybe those government types and those, NGO types, etc., might actually have to pay. That's certainly one way to make money at Twitter. Anyway, he's also talking about taking the company private, as I mentioned, of course, for a few years, and then getting back out into the public markets. So the thinking being, you clean up the financials, you actually make this company profitable in some way, shape, or form, which should be easy to do because I think there's plenty of low-hanging fruit that investors have just missed. Forgive me, not investors. I think investors recognize that this company really couldn't get their act together, which is why it was trading low, and Elon smartly recognized that value. But if you have a management team in there that can recognize how to extract the value out of the company, that would be a good thing. And that's what private equity investors are looking at. So I suspect that the company would come back to the markets in a couple of years, maybe in 3 years, once it's up and running, so to speak, in a way that's more profitable, right? Like it doesn't have to be that hard. Speaking of profitable, I know everybody's concerned about their portfolios in light of everything that's happening right now, and we're going to get to the Fed in just a moment, but I wanted to give a quick shout out to one of our newest sponsors, Key City Capital. Charlie Dombeck, you may have seen him on the show recently, a private equity investor for middle market stuff, for sort of everyday investors that's putting money to work in real estate and other kinds of investment funds. Really exciting stuff in this environment where the markets are so volatile and people are worried about recession and they're worried about inflation. So what do? I keep saying you got to have a diversified portfolio. You've got to look into different things. And part of that should include alternatives like real estate. Anyway, what Charlie does is really interesting. He goes through your portfolio, he looks at your tax returns, and he tries to figure out tax strategies that give you a little extra money to actually put to work in some of these investments. So I encourage you to check it out, keycitycapital.com/Trish. Again, the handle there is, or the URL is keycitycapital.com/Trish. He was also on the program last Thursday, so you can go and check that one out as well and learn a little bit more from him. But I think the idea is you want diversification right now, and you want tax strategies, frankly, that are being put into play that will benefit you, as a taxpayer and as an investor. So go again to keycitycapital.com/Trish. Watch my interview with Charlie. I think you'll be very excited to hear all that information that he has coming your way. I also want to talk a little bit about the inflation that's going on. But before we get to this, I mean, this is just amazing what we saw happening out in Ohio, because J.D. Vance, wow, he just climbed in the polls in the last couple of weeks. Interestingly, after Donald Trump endorsed him. He did win the day out there in Ohio. He now advances to the big race in November. He's running against Congressman Tim Ryan, I should say. This is for Senator Rob Portman's seat. Rob Portman, of course, is retiring, getting out of politics. And this will be an interesting one, because what I love about Ohio voters is that they really are just kind of salt of the earth, and they're interested in a lot of the same things that, frankly, I think you and I are interested in from a policy perspective. And so it'll be extremely interesting to watch. I should point out that Tim Ryan, he has a history of being pretty tough on China. He has a history for standing up for the American people on the jobs front. He's very anti-inflation. I mean, he's got a lot of values that are somewhat aligned with a lot of the conservative values. Not all of them, for sure. Not all of them. But that's why it's going to be so interesting, because he's not an AOC type. He's not a Bernie Sanders type. He's not an Elizabeth Warren type. He kind of didn't fit in entirely, perfectly to the Democrat Party. So now he's running against somebody who is really the antithesis of, right, everything that the Democrats stand for. And that'll be a very interesting barometer to see where that heads for us as a nation. Don't forget, this Vance victory is seen as a Trump victory because Trump endorsed him, and it really could spell some pretty good news for Trump-endorsed candidates, I think, in other upcoming primaries, including what we're seeing in North Carolina, Pennsylvania, Georgia, all over the country, really. So what is interesting, again, is that Vance shot up to the front of the pack just in the final weeks there after getting that endorsement from Donald Trump. And this is despite what you could call an all-out, affront, a real effort from the donor class and the establishment types to keep him down. They did not want him to win, but he did it anyway. So that's some pretty wild stuff. Meanwhile, I think one of the reasons someone like Vance is seeing all this success really is because the country's struggling with so much. I mean, whether you're talking about the border situation, whether you're talking about what's happening overseas, or whether you're talking about all this inflation back here at home. The inflation is bad. I mean, 8.5% is really, really bad. And again, I'm going to just make a push for diversification. You heard me just talking about real estate investing, and that being one way through perhaps a private equity style vehicle for accredited investors that can invest their money in different ways. The other thing to consider, and I really urge you to do this, is gold or precious metals, silver and gold for that matter, because these are things that will really hold their value over the test of time. Gold has certainly proven that. It's the reason why I've always liked it. And while, it may not always outperform the markets, it tends to be that product in your portfolio that helps to support when things are going down. Actually, it often does very well during good times as well, because a lot of people want to wear gold and they're more willing to purchase gold when things are good. So it's that wonderful hedge. And that's what I like about this product. I mean, I just think that with all the inflation happening in our economy, and the direction that we're going in terms of inflation, it's smart. It's smart to have somewhere between 1% and 5% of your portfolio invested in gold. So I encourage you to do that. And when you do, call my friends over at Legacy Precious Metals. You've heard me talk about them before. Wonderful group. They will take excellent care of you. I promise. Let them know that I sent you. You can call them at 1-866-589-0560, 1-866-589-0560, legacypminvestments.com. Again, I know all of them really well. They will take good care of you. You can think about, say, a gold-backed IRA. You can actually invest in actual gold itself, but considering all that's happening, it's probably a smart thing to do. We now have the Federal Reserve for the first time in 22 years. You got to go all the way back to 2000 to see anything like this. Moving interest rates higher. This is an interest rate hike by 50 basis points or half a percentage point. That's kind of a big deal. I mean, again, they haven't done this in 22 years. And the reason they had to do this, well, frankly, was because they dropped the ball earlier on. They should have. And this is the most shameful thing about it, because if you've been listening to this show, you know how passionate I've been about this. I've said over and over and over again, they needed to move on rates. And not only did they need to move on rates, they needed to reduce all their bond buying and mortgage-backed securities buying, which was artificially suppressing interest rates. Well, now they're finally doing that. Now they finally say they're committed to winding down their $9 trillion balance sheet. But here's the question. I mean, is it too little, or maybe I should say too much, too late? It's certainly too late. It's certainly too late. And we are now in a situation where we're looking at 8.5% in terms of inflation, and that's going to get worse considering everything that's happening overseas, considering the direction it's sending energy prices in. It means the cost of everything is just going to keep going up, not to mention we still have supply chain issues. And so you compile all of these things together and you've got a recipe for a real disaster. So can they tame inflation like this? Maybe on the margin, but at what cost? Does this send us into recession? I think it does. I've said an 85% chance of recession as a result of the Fed now kind of overdoing it, right? I mean, whatever happened to Goldilocks? Not too hot, not too cold. You want it just right. Well, the Fed just couldn't get the just right part. So now Jerome Powell's like, all right, I'm doubling down. I'm doing that half-point hike. But the problem is he's doing it now. It's going to be too much. I predict that we risk a recession. Not a big one, by the way. I should qualify what I'm saying because I don't want people to get too freaked out. And we did see a market that responded very, very positively to what the Fed did. I think because investors are like, whew, okay, finally, these guys mean business. Because, if they don't, if they just let runaway inflation continue, then what happens is you're going to get some kind of giant bubble, just like you did, which is going to turn into a big crisis, just like it did back in 2008. So we don't want that. You don't want some kind of debt crisis that's going to cause all kinds of domino effect like problems. We'd rather the Fed work proactively to prevent that earlier on. They should have done it earlier. They're playing catch up. And we probably will see a retraction in the economy. Look, that's just the reality. I don't think the Fed has ever moved so aggressively on interest rates in terms of hiking them and not had a recession. You can go all the way back through Fed history to see that. The other thing to keep in mind is, and I've told you this statistic before, but over the last 80 years, anytime the Federal Reserve has tried to reduce inflation by 4 points like they're trying to do now, we have always wound up in recession. So any which way you look at it, that's very much a real possibility, which means, yes, if you're in a recession, you're probably in a bear market. You're probably going to see companies earning less, therefore a reduction in their valuation. But I would just say, sharpen your pencil. If that's the case and you've got enough of a long-term horizon for these markets, this is your chance, actually. And this is why you want a dollar cost average in every single week. Don't even think about it. Just say, I'm putting this much money into my portfolio every single week, and I'm just going to do this. And what I don't see, I won't miss. And then you wake up in 5 years and hopefully you're in much, much better shape. I do think it's going to get tricky, but it's not undoable. I think you can still make money and you can still grow in this market if you're smart about it. Remember that. You got to be smart about it. I love having you here. I want to just point out that it's really important, if you haven't already done this, make sure that you subscribe to the channel. Make sure you hit the alert button. Make sure that you signal that you're okay to get an alert from me. That way you will always hear from me. It's much harder to get shadow banned, shall we say, when you hit that alert button. So do me that favor, hit the alert, hit the like, share the video. Share the video with all your friends. Let everybody know I'm over here. I love having you here. I just joined Truth Social, by the way, which is a really neat platform. I do think Elon Musk may have a little competition on that front, and I suspect that Donald Trump will not be going back to Twitter because he's got his own platform now. He's got Truth Social. The other thing is I'd love to have you over on my Rumble account on trishregan.locals.com. You can support the show there at trishregan.locals.com. Also talk to me directly. I read everything that you guys put there, so please, I encourage you to be on that platform as well. And of course, subscribe to this podcast on Apple, iTunes, and on Spotify. I'll see you right back here tomorrow.